Hello, traders. It's 8:01 Chicago time on Tuesday, the 14th of April, 2020. This is episode number 1733. Thanks for joining me yet again and again and again and again. Appreciate that. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, gap up on the indices. The S&P's got a big gap going at 47 points or 1.7%. The leader today is the Russell taking off up 29.5 points or 2.43%. The Nasdaq's up 2%, and the DAX back in business up 118 points or 1.15%. The stocks, the Euro stocks, are up 31 points or 1.09%. Gold is also approaching 1800, trading at about $1,770. And the laggard today is crude. Crude falling 5.22% or $1.17. May crude, WTI crude trading at 21.24. Crude has moved away from its balance area since April 2nd. April 2nd, it had a huge pop higher, has balanced out. The point of control that balance is around 26.52 or so, and has moved down and taken back that entire rally on the 2nd of April and is moving towards that $19 price point. So that's where we stand there. So risk on sentiment today, risk on for the overnight session. In terms of what's ahead or what's actually happened, some interesting things. We did kick off our earnings season with J.P. Morgan and Wells Fargo this morning. Some interesting numbers out of them. J.P. Morgan came in at at an earnings of 78 cents compared to year on year at $2.65. Revenue is 29.07 billion, down 2.6% year on year. It looks like it includes 6.8 billion reserve bills, largely due to COVID-19. And Wells Fargo came in at a penny EPS versus an estimated 62 cents. This is, of course, versus the $1.20 year on year. Revenue of 17.7 billion versus 19.44 expected. The Q1 includes a reserve build of 3.1 billion for COVID-19. So this kicks off some an important earnings period. We get to finally see we get to see what effect this March, this really dreaded March, had on earnings. We still have a few releases after the market. JB Hunt is a transportation company that's due after the close, and then tomorrow there's some key earnings. U.S. Bancorp and many others. It's earnings. Bank of America is announcing tomorrow. Goldman Sachs, Citibank, PNC Bank. A lot of earnings coming out tomorrow. So just keep an eye on that. A lot of these are before the open and are likely to have an impact on what we're doing for the session. In terms of what's ahead on the calendar. This morning we did have the U.S. Export prices and import prices both down quite big. Export prices year on year came in at negative 3.6 versus prior negative 1.3. Import prices year on year came in at negative 4.1 versus prior negative 1.2. Both came in better than forecast. We get Fed's Bullard at 11:05 a.m. Eastern. We get Fed's Evans at 12:30 Eastern, and then at 4:30 Eastern we get API crude oil stock change. The prior is 11.9 million surplus. And in this evening, Australia gets its Westpac Consumer Confidence, which is a high tier figure. That gets released at 8:30 p.m. Eastern Time, Eastern U.S. time. In terms of what was expected yesterday versus what we got, it looks like I lost that screen. Just a couple seconds. Set that up again. So yesterday was a bit of a mishmash. Mainly expected the market to consolidate and drift up. The secondary, here it is, expected the market to consolidate and drift up. I saw this as an excess low from the prior session. And a decent close. Expected it to continue to drift up. Did not do that. The secondary is if it doesn't drift up, then we are likely to test into the prior range and close that 27, 34, 75 area. The 34, 35 area is key. Remember, I've drawn this several times, this high volume node. This is the strongest balance in the area. Here's what happened yesterday. We actually opened pretty strong and a bit of a drive. On the open. We dropped right into this area that I drew in the scenario screen. That pink line, this pink line right here. That if we don't hold on to that excess, then we are likely to drop pretty quickly. And we did. We pushed right into this high volume node, consolidated, pulled back to the mid right here, which provides the first setup of the day for a push into 2720. 2720 is a big area to pay attention to. It's been in play for a week or so. And then from there, we get this strong bounce, higher low, consolidates, and then pushes higher. We have a pretty balanced day yesterday, normal variation day, or normal day actually, quite a balanced day, and it sets us up for a push in either direction. Really, we have the point of control yesterday is right on top of, it's 2730, right on top of the high volume node. The market came back, tested balance, and now it's trading way up here. I have to be frank with you. I didn't expect it to be popping higher today, but the overnight session was relatively strong. Uh, China's approving experimental COVID-19 vaccines for clinical trials, and also the Fed is launching commercial paper liquidity backstop today. And POTUS, the president of the U.S., is speaking about opening up the economy, opening up for business again as soon as possible. The market likes that information and has popped higher as a result. So that's how things look currently. On the order flow, fairly steady session so far. It's really been drifting up pretty much since the drop after the European Open, and we've pushed into the 2800 multiple times now. And you can see here that the market's got an upward tilt, risk on, and there's quite a bit below us to support. The prior high a day right here at 72, 71, 75, 72 has got pretty decent liquidity below there. We have liquidity at the 60, 62. This is yesterday's close area, and so on. So there's quite a bit of support beneath the market, and it's pushing through these liquidity offers, these liquidity pools above on the offer. It's pushing through pretty good. It seems quite bullish today. Looking above where we are, the 2809, 2809.50 was last week's high. Um, was last week's high, and you could see that there's an offer up here in that area, but it's thickening up. This whole area is starting to glow a little bit. It is likely to continue to walk through here. I'm expecting it to push into 2820 this morning. So that's how that's shaping up. Let's take I want to remind everyone for just a moment that tomorrow afternoon I have the honor of hosting Jeff Snyder of Alhambra Investment Partners. He's a frequent contributor to Zero Hedge. He's a frequent guest on Macro Voices. This is a guy when he talks, I'm listening, and it's basically drinking out of a fire hose when it comes to macro and economic conditions. He's been quite spot on since last September when the Fed started to act pretty aggressively in the repo market, and that basically triggered off the rally from September all the way through February. And so the question always comes up, what the heck is a repo market? Well, how does that work? Why does that impact equity prices? How did it impact us? So we're going to have him on tomorrow at 4:30 Eastern to answer the question, what is the repo market? How does it impact us? And also, we'll spend a few minutes talking about his expectations once the economy opens and how things will look like. He's very, very generous with the information that he's sharing, and he's doing us the honor of coming on and sharing that information with us. Expensive information, I'm sure. So if please register, it's you can register at go to ct.pro/repos. Go to ct.pro/repos. That's how you get to it. Uh, so that's please take a moment to do that. Let's get down to business here. Markets breaking higher. We're pushing through. We just pushed through the last week's high. Here we are. So we are shifting higher here above the most recent high. Remember, 2780, where we closed last Thursday, was the 50% fib from the all-time high to the low, 2781, and we continue to squeeze higher. The expectation there was we would push up against it, and we're likely to activate some sellers, and we're likely to push back below 2700 at least momentarily. 2620 was the midpoint of the rally coming up since April 1st, and we're just still going strong to the upside. So likely, what does that all mean? It means that we're likely to continue to squeeze higher. We're opening in an open, likely in a gap. I'm expecting the market to have a small response towards the point of control 2800, and then I'm looking for it to pop higher into 2820 and then to start working itself up to 2831.50 before it takes a break. The ranges are collapsing, volatility is collapsing, and so I'm not expecting a lot of range, especially to the buy side. Uh, the secondary scenario is an open that pushes into that to 2820, attempts to go higher, unable, finds a response, consolidates back against the open down into the point of control 2800 and starts working itself back towards the 2780 before it consolidates for a bounce. We are likely to keep the gap zone open here. The gap zone now is measured to 2771.75. Looking for that to remain open. But that's the responsive scenario. Scenario three, because we're out of balance this morning, is likely to be a test down and a strong push higher, a test down and an impulse higher that uses 2820 as a base, consolidates in this big area, which is 2831, and then given that it's a drive, likely to push to 2850 before it rests up. That's the strong bullish scenario, and there's a lot of fuel on the short side to get that going. Okay, I was going to share, excuse my throat. I was going to share some a point of wisdom here, a bit of a trader wisdom, but I'll pass on it because this is getting too long. It has to do with the idea that right decisions, right outcomes are an indicator for right decisions, which is just incredibly misleading, and it's a big part of trading. I had a bit of a discussion, almost a debate with someone yesterday about it, and it just seems like it's misleading thought. I'll reserve it for some other time, but traders really need to stop thinking that just because they got paid on a trade, then that setup is strong or they made the right decision. Those two are not necessarily correlated. Good luck today, and I'll catch you tomorrow. Take care.